There used to be murmurs of doubt and skepticism, but statistics don't lie, and the most recent data has given an outdated viewpoint a fresh look. We dispel myths and reveal Tesla's actual worth today. In this video, we're going to take a closer look at Tesla's market management innovation acceleration and explain why, in the middle of a heated price war, now might be the right moment to add Tesla stock to your portfolio. The undervaluation signal of Tesla. Let's switch gears and find out by purchasing in a market where bumper cars are played with prices. Here on Tesla Stock News, follow along as we dive headfirst into the electric avenue of Tesla's market dynamics. But before we do so, don't forget to slam that notification and press the like button on Tesla Stock News. Alright, let's get started. In January 2020, the globe was on the verge of a COVID-19 epidemic. Two investors had a fascinating discussion on the future of Tesla Incorporated that turned out to be both insightful and terribly mistaken. Viewers may remember, looking back, that Tesla surprised the market in the third quarter of 2019 by reporting a quarterly profit of $143 million for the first time. With the start of its profitable period, Tesla was able to redefine its performance in the market. The company that was at the center of the Tesla story was one that was experiencing a rapid ascent, with its stock value reaching $1,450 following 2 quarters of profitability and pre-split adjustments. This served as the setting for a daring bet against the odds that undervalued the electric potential of the automotive titan by questioning Tesla's capacity to cross the $700 barrier by the end of Q1 2020. This was a wager made in a world where the unexpected hasn't yet rocked the stability of mobility, not just a test of Tesla's market performance. The worldwide incident known as COVID-19 would put economies and businesses alike to the test in an unexpected way. Within that quarter, the price of Tesla's shares nearly broke $11,000, drastically defying the predictions of market analysts. This result served as a sobering reminder of how erratic the stock market can be. Even the astute investor Warren Buffett acknowledged the exceptional trajectory of Tesla by withdrawing from the fight against Elon Musk's unstoppable power and selling his stake in electric vehicle manufacturer by Company Limited since that pivotal wager. Tesla has set out on an incredible journey, consistently providing its investors with returns that far outpace average market increases. This, dear viewers, demonstrates the value of flexibility and creative thinking when it comes to investing ideas, which occasionally call for us to question our long-held beliefs in order to succeed in rising from modest beginnings to a dominant position in the market. By the second quarter of the fiscal year 2023, Tesla's journey is the corporate equivalent of the traditional zero to hero story. The lion's portion of Tesla's astounding $21.3 billion in sales comes from the company's electric car business. This enormous revenue shows an astounding rise of 3,946 annually since 2013, which averages to an annual growth rate of roughly 395, which represents Tesla's early years. The story was radically different. Due to its excessive reliance on government subsidies and unstable finances, the venture was on the verge of failing. A pivotal moment occurred in 2008 when Elon Musk, the CEO, disclosed the business's near bankruptcy, highlighting the dangerous route such entrepreneurs frequently take. This unstable start is evidence of the unpredictability of the early phases. Ventures draw attention to the reality that a company's potential does not guarantee success in the face of significant odds. The tale of Tesla did not finish there. The firm drastically changed its fortunes by the end of 2022, generating operational income of over $13.7 billion and an operating margin of 16.8% thanks to tenacity and relentless innovation, a number that represents leadership in the auto industry as well as profitability. Let's now shift our focus to the larger EV. Our viewers might find it interesting to learn that, in 2020, EVs made up just 2.2% of the U.S. auto market. By the end of 2022, that percentage had more than doubled to 6.1%, and analysts now predict that it will rise to 8.5% by the end of 2023. But there's more to the story than meets the eye. In the first half of 2023, EVs accounted for 16% of light vehicle sales worldwide, a startling 49% increase. Comparatively speaking, this trend is here to stay and is expected to pick more steam as more nations establish regulations restricting the sale of internal landscape can be linked to a growing price war, as automakers' purchase for profit margins are frequently sacrificed in the name of consumer. Worldwide, Europe is the second largest market, behind China. However, in the first half of 2023, Tesla secured the majority of EV sales in China, holding a 21% market share, while Tesla continued to pursue a close second at 15% due to the fierce competition in the EV market. It's critical that our audience understands Tesla's pioneering role in this sector, which has given the business a significant competitive advantage over competitors. Let's start by highlighting Tesla's technological capabilities. The company's significant investments in battery innovation have placed it at the forefront of cutting-edge electric vehicle technology. Tesla automobiles are known for their exceptional performance, quick charge times, and outstanding range. With these characteristics, Tesla remains at the forefront of both consumer demands and EV technology. Secondly, Tesla's vertical integration strategy is a prime illustration of operational effectiveness. By managing its supply chain, especially when it comes to battery manufacturing, the company reduces expenses while upholding unrivaled quality control. Swift design revisions are made possible by this seamless integration, which increases productivity and lowers production costs. Thirdly, with its advanced driver assistance systems and an abundance of data to hone its algorithms, Tesla is frequently seen as a trailblazer in the field of autonomous driving. In the race towards a future with completely autonomous driving, Tesla stands out as a frontrunner. Finally, but just as importantly, take into account the Tesla supercharger network, an ever-growing network of charging stations that greatly reduces range anxiety among electric vehicle owners. This network strengthens Tesla's standing in the market and enhances the attraction of the company's automobiles. Tesla is proactively expanding and directing its technological capabilities towards a variety of commercial opportunities. The fact that Tesla is expanding, even if its current success is almost entirely dependent on EV sales, may appeal to viewers. With Tesla expanding into solar energy solutions and releasing items like solar panels and cutting-edge solar roof technologies, the energy industry is booming. The potential market for these technologies is enormous, given the global need for clean energy options. With a Powerwall and Power Pack, Tesla is leveraging its cutting-edge battery technology to break into the energy storage market. These inventions are more than simply goods. They're a lighthouse for off-grid, sustainable living, and a lifesaver during blackouts. Let's talk about valuation now. The idea that Tesla is cheap may cause some people to scowl, particularly considering that its forward price-to-earnings ratio is currently sitting at 74.4 times its anticipated FY24 earnings. In contrast to Tesla's historical 5-year average future PE of 119 times, context is crucial. The valuation as of right now shows a significant markdown of more than 37%. Furthermore, the forward enterprise value to EBITDA ratio now indicates a 5% discount, as it is somewhat below the 5-year average. It's wise to keep in mind that these valuation considerations, along with the competitive pricing environment in the EV industry, are factors that are projected to contribute to Tesla's expected decline in EBIT for 2023. But looking ahead, a recovery in EBIT is expected by 2024, supported by a market correction that permits margin recovery. Based on a projected cash flow model that incorporates analyst consensus from sites such as Seeking Alpha, Tesla is expected to raise its margins from an estimated 11% at the end of 2023 to a healthy 20% by 2032, continuing its trend of setting the bar for the industry. By 2032, sales are expected to reach $480 billion, representing a 38% annualized growth rate. By the same year, this model projects an EBIT of $96 billion. For investors, what does this mean? As of right now, the projected fair value of Tesla is $324 per share, which represents a significant undervaluation of around 29% relative to the current price of $253. This is despite the possibility of short-term volatility, including responses to the next earnings announcement. For investors who are considering the long-term horizon, the investment thesis is still strong. It is quite amazing how far Tesla has come from near bankruptcy in 2008 to being an EV trailblazer, with nearly 3,946% growth in revenue over the last 10 years. Even if the business is only now profitable, it is already producing a sizable amount of free cash flow, which is a crucial indicator of an investment's viability. The subsequent price war is shaping the future of the industry in this context as the EV market explodes. In addition to solidifying its position in the industry, Tesla's cutting-edge EV software, excellent battery technology, and wide-ranging charging network also portend a potential growth trajectory. Despite fierce competition, Investing in Tesla is a highly recommended course of action given its current stock price, which represents a 29% discount to fair value. Long-term investors may find Tesla to be an appealing addition to their portfolio. That concludes our in-depth analysis of Tesla's present situation and future prospects, covering everything from its daring change of direction into solar and energy storage solutions to its extraordinarily high valuation. Despite heightened competition and a convoluted market landscape, Tesla perseveres in navigating the turbulent seas of the electric vehicle (EV) market with its own blend of innovation and strategic foresight. With an estimated fair value much higher than the present stock price, Tesla's technological edge and efficient production processes might help it not only maintain its market leadership, but also generate substantial growth in the years to come. For investors who possess patience and a long-term perspective, Tesla appears to have promising investment prospects. What are your thoughts on Tesla's current marketing approach? Does this possible undervaluation mean that investing is a good idea, or do you think the competition will make Tesla's prospects less bright? When thinking about adding Tesla to your portfolio, how do you balance the risks and opportunities? Comment below with your ideas, and don't forget to hit the like button and subscribe to Tesla Stock News if you felt our analysis was insightful. We appreciate your time and we'll see you in the next video.